That decline in commercial real estate may be slowing, according to a report just now released by the National Association of Realtors. The NAR says that commercial real estate will remain weak well into 2010, but they do say recent actions by the Fed should improve the flow of cash into commercial lending. Chief economist Lawrence Yun expects the economic recession to end within 6 months, allowing a recovery in commercial real estate after that. But let's look more broadly at the market here. The NAR says commercial vacancy rates will continue to rise while rents decline in the near term. Well, on the residential side of things in the real estate market, we did get a glimmer of hope yesterday. News that construction of single-family homes rose for a 5th straight month. But can we say that we're out of the woods yet? How much of an indicator is that? We're going to put that question now to Nick Retsinas, Director of Housing Studies at Harvard University. Good morning to you, sir. You say that glimmer of hope as it was billed in terms of single-family home data yesterday, really not necessarily indicative of what you are seeing in the housing market.
Well, it is a glimmer. The signals are mixed. Mixed is much better than all bad, which is what they were 6 months ago. And we found that as prices falling, people are drawn to the market. Interest rates are still low, so people are drawn to the market. There are some government tax credits, federal, California, 1 or 2 other states. All of that is undergirding the market. But it's a little too early, I think, to declare victory or the end of the game. Prices are still falling. Foreclosures are still rising. People are still losing their jobs. So I think in the near term, we're in for a continued rocky road.
Mm-hmm. And what's driving that? Is it, as some have suggested, primarily the unemployment issue, or are we still looking at the fact that prices may not have stabilized in certain markets?
Well, everything's related to everything. It's a Rubik's Cube, if you will, in terms of the economy, and particularly the residential sector. As people have lost their jobs, what happens when you lose your job? You can't pay your mortgage. If you can't pay your mortgage, you default. There's a foreclosure. If there's a foreclosure, whoever now owns the property will accept any price to sell that property, further driving down prices. So the jobs have to stabilize before we really can start to see a full recovery in the housing market.
Mm-hmm. It's been said that places like Washington, D.C., where the government is hiring, in areas where there are industries still growing, those very much related to the healthcare industry, that those markets are showing a relative strength versus the Sunshine State, versus what has happened in those Sun Belt areas. Are you seeing that to be true as well?
It's a really big country, and markets are very, very different. And certainly, I think we're closer to the recovery in those markets that were not substantially overbuilt. So I'm a little more optimistic that we'll see the recovery in the Northeast, for example, before we see it in the Southwest, where you had such high levels of overbuilding, you had such high rates of sort of foreclosure. So I think it'll be mixed. But at the earliest, I think we're talking about the end of 2009 in the relatively stronger markets. But in the other markets, we're at least a year away from recovery, I think.
Mm-hmm. Switching gears and looking at the commercial real estate market, people have been talking for a good year now about that being the other shoe to drop. How worried are you about commercial real estate? How much of that concern has been overstated?
Well, I don't know that it has been overstated. I think they've lost their shoelaces. They haven't lost their shoes yet in terms of the shoes dropping. But the problem is many commercial real estates were financed on loans that had to be refinanced. And at this point in time, as valuations are lower, as loan-to-value ratios have gone down, lenders are leery of doing that. So even though there are, in some of these projects, there are tenants, those tenants can't support the new valuations that are required. So again, I think in the commercial real estate side, that too is tied to the job market. And I think the next 6 to 9 months, I think, is not going to be very pretty in commercial real estate.
Right. And then a lot of lease renegotiation happening as well,
right.
And that affecting prices. Thank you so much, Nick Retsinas of Harvard University.